Mike Briggs is our cattle market analyst this week. Nebraska was the top commercial red meat producer in the country for June. This state accounted for more than 16% of the U.S. total, ahead of Iowa in second place and Kansas and Texas in third and fourth. While its hog output was up slightly for the month, Nebraska's cattle production was 18% higher than June 2015. The USDA's latest cattle on feed report showed the nation's inventory, placements, and marketings all ahead of a year ago. Nebraska's marketings for the month were 6% higher, but its inventory and placements were both lower. We talked with Mike Wednesday morning about the recent data, but started by asking about weather's effect on cattle performance during a recent hot stretch in July.
It's been pretty tough over the state. Now last week was really bad, but we got kind of lucky. A lot of the times there was wind. And the other thing you have a little different with this heat spell usually than you do in the May or June ones, the cattle have acclimated themselves to it. We lost 5 cattle. Now we have sprinklers, so maybe our losses were, from what I've heard, quite a bit less than others. But just the fact that the cattle are acclimated to it, those big heat surges like we have in early June where you have the massive losses, cattle haven't become acclimated to it. They're doing okay, but it was tough. It knocked them off feed, and you had some digestive issues and stuff, but for the most part we got through it pretty good.
Let's start off talking about the live market. Tell me why we've been on this slide.
Great question. My theory is captive supply. I had to explain this to my kids the other day.
I'm sure they enjoyed that.
They didn't understand. I said, okay, let's go with this way. You need 100 Kit Kats to run your little Kit Kat store, and the other dealers give you 85 of them, but they say, you don't have to pay for them. You pay me whatever you have to pay for those last 15. And I'm like, so how much are you going to pay for the last 15? They picked right up on that, but apparently as a cattle feeder, that's a hard deal. We don't understand that. Because you've got captive supplies up in the 70 or 80% area. It's really gotten to be a problem because the packer has enough cattle if he chooses to not buy any. And that's kind of what he's been doing. Well, in doing so, the price just gets a little bit lower and a little bit lower. Well, all those cattle are priced off the weekly average. Well, they're not stupid. They're going to try to pay less so they can pay less for the whole deal. And so it's really frustrating right now. The cattleman is his worst enemy. We have got to stop having so much captive supply and make these guys have to buy them. Since they don't have to buy them, the price just keeps working lower and working lower and working lower. And until that stops, we've got a problem.
What are margins like in the feedlot?
Big negatives yet, and I don't know when we're going to see positive margins. We may not see positive margins till fourth quarter, or you may have to get clear into second quarter of next year. And the only reason you're going to make that money is because you've hammered that rancher so bad on his calves, because you're going to have to buy margin. That's the thing that's so surprising to me. After all the money that's been lost in this industry, that you still get cattle offered to you that are $50, $60 losers, it just amazes me.
If you look at that cattle on feed report, specifically in Nebraska, 59% of the cattle Nebraska placed were over 800 pounds. Why is it happening like that?
That's a function of a lot of things. You had a lot of backgrounders, didn't like the calf price last year because it was lower than previous year, or ranchers, so they backgrounded the cattle. Well, just like the fat cattle market, it just kept going down. So when it was time to sell them as 800 pounders or whenever they typically would sell in January, they were still huge losers. Didn't want to do that. So they fed them a little longer. Or we put them on grass because we had a lot of rain, had a lot of grass. So people couldn't sell those cattle and make any money. Thought, well, I'm going to put them on grass. So they put them on grass. Well, now they're big and the cattle market still is terrible. And they're still going to have a poor price, but they've fed them to, they've backgrounded to a point where they got to let go of them.
We saw in that slaughter report, production was up 10% in June, but meat prices, ground beef reversed a 6-month slide, retail beef increase is the highest since March. Why is there that discrepancy?
You have one of the biggest spreads between cash cattle price and retail price that we've ever seen. And it's just a simple fact. Retailers are not lowering their prices. They have enormous margins. And when the beef board goes and talks to them, or cattlemen talk to them, there's, well, beef's moving just fine at this price. And we have to make our money back from when we lost all our money when it ran up so fast. But the point being is they're very good at adjusting price to the demand, and it's moving here, so they're not going to move it down.
Right, they have to be selling something, otherwise the price would
Exactly.
come down.
I think customers adjusted a little bit to the higher price. The economy's doing a little better, but retail beef needs to be nowhere near where it is. Nowhere near. In fact, that's what's disappointing, and it goes back to the captive supply deal. Cash cattle should be in the 125 to 135 if you look at retail price. We're 10 or 15 bucks below that because of the captive cattle.
All right, where do markets move here in August?
I'm hoping we put in our low last week at 114. The market's got to close this week. The August contract needs to close Friday above 111.20, and that signals a technical change, and hopefully then the funds will reverse course here and we'll start going back up. I don't think, we could have a pretty good, we could have a $10 or $15 rally, and it really doesn't mean that much. It would sure help us out here. In fact, I think that would probably turn us into some black margins it would on some cattle we have here. And wouldn't need to raise the retail price at all. It's just going to squeeze the packer and the retail margins. But those guys have huge margins right now. They can afford to let some of that go.